The most important number in real estate is not the cap rate or the price you paid or the ROI or the cash on cash return. The most important number in real estate is the number of units. Guess what? The most important number in Bitcoin is not how much it sells for today. The most important number is not your cost basis. The most important number in Bitcoin is how many units do you own? If you're starting with Satoshis, it's going to be 1 Satoshi, 10 Satoshis, 100 million, boom, 1 Bitcoin, 2 Bitcoins, 10 Bitcoins, 100. If it's going to go up, the most important number you will have is how many units you have. Okay, period. It won't be the price you paid to get in it. If it's going to go up. So the number of units is your scaling number. McDonald's, Coca-Cola, Google, Facebook, these companies, NVIDIA, these companies are monster. Disney tickets. They're monster companies because of the number of units, not the quality of their product. So now, what percentage of my portfolio or my net worth, I'm not going to answer, but I will tell you this. When we just did a $230 million asset. Let me see if they can bring me this. Call Andres. I might have it on my phone here to show it to you. We bought a $230 million asset, 66 units, and we took 230 and added $100 million of Bitcoin. Okay, now that would look like 50% of the real estate, but really it's 1/3 real estate, 1/3 debt on the real estate, good debt, and 1/3 Bitcoin. That's our commitment on that deal. A third, and a third. A third debt, a long-term 5-year mortgage at 5%. I'm getting 5% money that cash flows and buys me more Bitcoin. Okay, and the pie chart will start out. Let's see if I can show you this. The pie chart will start out where it looks like a half Bitcoin and half real estate, because the mortgage isn't counted. When you look at the equity in the deal, it's going to be a half and a half. But by the time 5 years goes by, it's probably going to be 90% Bitcoin and 10% real estate. Even though the value of the real estate didn't go down. Value of the real estate's still 230 million or 300 million. You follow me? But the Bitcoin, if it does its thing, if it just doubles from here and gets to 200,000, it'll start taking up more of the pie chart.
Yeah, that's what I was kind of wondering with the question of, like, if you start integrating in all the real estate properties Bitcoin, and Bitcoin does what it did the last 10 years, it will automatically be a huge part of the portfolio.
Yeah, it could be. We're doing 12 deals right now. It's $1.2 billion of real estate, and we're adding 200. We'll end up with about $250 million of Bitcoin. I think in the next 3 years, I could end up at 1.2 and 1.2. I didn't change my real estate. I didn't add to the real estate, just that portfolio. And then in the future, it could be $3 billion worth of Bitcoin and $2 billion worth of real estate. But I have both of them. So if the Bitcoin dives, if the Bitcoin falls apart, I still have my real estate. What's super cool is that I'm onboarding people into real estate. Into Bitcoin that don't know anything about Bitcoin. The phenomenon is happening because of this portfolio. And the reason I think it's going to be, like the first greatest innovation in real estate for 65 years is because the people, look, 99% of population Earth already has reality with real estate. They have an agreement. Is real estate good? Yes, it's good. Okay. Would you like to own real estate? Yes, I would. Okay. If I gave you some real estate that cash flowed, would you want it? Yes, I would. Okay. Nobody needs to read the white paper. Nobody needs to read the Bitcoin Standard. You don't have to watch 100 hours of Mike Saylor. You're going to just say, yes, real estate is good. It's been around for 2,000 years. People have sought shelter forever. There's an agreement, mass agreement. Yes, I want real estate. Now, if you flip the conversation and say, do you understand Bitcoin? It's almost inverted completely. 98% are going to be like, I don't know what you're talking about. I don't know what it is. It sounds weird. It sounds like a pipe dream, blah, 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 right? So what I'm doing is leading with my real estate and adding Bitcoin. I'm leading with the place of most agreement. And oh, by the way, it's got some Bitcoin on it. I don't even have to explain the Bitcoin to people. And I came about this talking to Mike Saylor, talking to my brother Gary. I think Eric Weiss was at that meeting. And I was in a room once on X, and there was a debate. What's better, real estate, Bitcoin, or stocks? And I got off that call, said, why not all three of them? Why do we have to argue about which one is best? What if you could put all three together and create a super product?
I think actually, like, and this is the same thing. I mean, Saylor obviously, like, Saylor also did not throw away his company. He integrated Bitcoin into his company. I mean, obviously now it's a whole nother thing than it was 5 years ago. But he also went slowly in there. And I say that to people all the time, like, don't quit everything that you're already doing. Try to figure out how to integrate this thing more than just like throw it over.
Yeah. I love that. I love that because everybody was telling me, oh, you need to put your real estate on the blockchain. That cost me 4 years listening to that nonsense. Okay. All we did, look, all real estate has a LLC wrapped around it. Every piece of real estate on planet Earth probably has a limited liability company wrapped around it. All we did was we replaced the cash on our accounts with Bitcoin, suck it into the same entity. The thing that we're doing different is we're doing trophy real estate. This is best in class real estate, not garbage real estate. Because not all real estate is created equal. All Bitcoin is created equal. Okay. Every piece of Bitcoin is equal to the other piece of Bitcoin. Real estate is not equal. You can have something on one side of the street, across the street, it could be garbage, and right here it could be like pristine. So I want to show you this if I can just show you this pie chart I was referring to, if it'll let me. I don't know if it will.
Sometimes you have to give permission before you start the call, but maybe you can try.
I think it's going to let me show you because it tells a great story. If I can find this, let me see. I can't find it. That's fine. I'll send it to you. Maybe you can insert it for the presentation.
I will insert it later on. But this is an interesting one because I think real estate on a blockchain is just like another, like, why would you put cement on a paper? Like, if you know what I mean, it doesn't, for me, it does not make any sense.
Yeah, exactly. It doesn't make any sense. Like, it's just complicated. And, this is a simple way to put to blend the two together. That could be a way for people to have access to both assets and not argue about which one they want to be in. And then your audience is going to be like, yeah, but which one's going to outperform? I don't know. And you don't know. Last 12 years, Bitcoin outperformed everything. You win that argument. But you still only have one asset, so you don't have to pick anymore. People can have the choice of both.
I like that. I'm curious because I think as you assess investment is a lot like Bitcoin is actually look at the Bitcoin, because you say like you don't like paper, and this is a very Bitcoiner thing, that they don't like paper promises. They like the real thing. They like owning the Bitcoin themselves. How in general do you go ahead and say like, is that worth putting into my portfolio? Because you could also, instead of Bitcoin, just take like the S&P 500 to the real estate deal or something else. Like, how did you go ahead and like assess your investment options and do that? Like, there's a physicality of Bitcoin being able to actually own it yourself without paper promises, like one thing that was really important for you?
So you're asking me. I'm not sure I understand the question.
In Bitcoin, it is similar to gold, where you can actually take delivery of the physical thing.
Right.
And you said that you don't like to trade paper for another paper. And this is a very Bitcoiner thing to say, to have like no paper promises. And I'm just curious on how you went ahead and said, what should I add to my real estate? Because you can also add like anything else, like S&P 500 index to the real estate.
But yeah, okay, that's now I get it. Okay, so sorry for my ignorance on that. Well, it's a good question. Why not add gold, right? Because gold's not liquid. Like, it's not liquid. Like, people are like, oh, my gold, you can sell gold. I don't even know where to keep it. I'm 67 years old. I've never owned gold in my life. I've never owned it. No one's ever offered to give it to me. Nobody's ever said, we take gold. I don't understand gold. I don't know why anybody would want to collect it. The fact that it's been around for 2,000 years and is supposedly limited, I don't buy any of that. I don't think it's limited. I don't think it's going to be more expensive to find in the future. I think it's going to be cheap to find in the future, and they're going to find unlimited quantities of it. I'm not convinced about the gold thing at all. They could have said dirt was gold for what I know. I don't, it comes out of the ground. Maybe I'm aware it around my neck. Anyway, I'm not putting gold with my real estate. It has no real use. You're going to melt it down for a ring, maybe, I guess. More likely you're going to lose it. So that's the gold thing. Same thing for silver. Now, stocks, I don't know why I'd put a piece of paper with my real estate. Okay. I know my real estate, the Vatican's been around, or the, Sistine Chapel's been around for how long? Longer than Facebook, Nvidia, Google, Microsoft combined. These companies are going to go away. All these companies that are represented by a piece of paper will disappear in the future. The average company today, when I was growing up, the average company was like 75 years old. Eastman Kodak was, 100 years old. Lehman Brothers, 180 years old. They don't exist today. Every company has a shelf life. Now, does Bitcoin have a shelf life? Maybe. Maybe it does. The real estate, I know for sure that piece of real estate, this deal right here, 100 years from now, that piece of real estate will still be right there. You're not going to get rid of it. You might scrape it and build something new on top of it, but as long as there's people congregating there, there's going to be a piece of real estate. It's going to be a church. It's going to be a place to live in. It's going to be a place to shop. It's going to be something. So now, why the Bitcoin rather than these other things? It's because it mixes with this thing so nicely. One's real, one's not real. One cash flows, one doesn't. One comes with a big monster depreciation tax write-off, and one has no tax benefits. One's liquid 24/7, 365, and the other one takes a tremendous time to get rid of or to be liquid. See, I like things that I can't sell, and I like things that I don't want to sell. I like things that I'm like, I'm not worried about this, but if I need to sell it, I'd like to. The problem with real estate is you can't sell it, okay? Even the best piece of real estate in the world. This deal right here is $235 million. Who's got $235 million this weekend? Let's say I need the 235. I can't sell the whole thing this weekend, which means I don't have to have, oh, should I sell it? Should I sell it? Oh my God, how much is it today? Like, this is the beauty about real estate, is that I don't have to look at it. Let's see what Bitcoin's trading at today, okay? If Bitcoin went to $1 million right now, okay, it's at 117.8 right now. I'm like, oh my God, should I buy some? Should I get some? Oh, damn, I wish I'd have got it at 108. See, this kind of stress does not come with real estate, because you can't sell it and you can't buy it today. You can't buy that piece of real estate. It's not for sale. And you can't sell it today because they just don't transact that fast. This is liquid. This is liquid, which means I could buy it, sell it, do something with it. Am I missing it? Is it about to take off? I'm going through all this anxiety, right? Now, if you put the two together and I lay Bitcoin on top of that piece of real estate that cannot be sold, and the Bitcoin goes down to 70,000. So what? I still own my real estate. I didn't plan on getting rid of this. I'm not trading it anyway. I'm waiting for the two together to go up together. And so I think that's why, to answer your question, would I do this with gold? Never. Would I do it with silver? Not a chance. Would I do it with stocks in a company? No, it doesn't make any sense. I would keep them separate. I would buy the real estate and go buy Nvidia stock and have them separate. There's no benefit of combining the two. But when you combine the real estate and the Bitcoin together and then bring stock and then go public, you basically have a treasury company with a real company. I'm going to take advantage. I'm going to exercise a competitive advantage over the 190 treasury companies that are taking zombie shells, raising money to buy Bitcoin, And the only thing left in that house is Bitcoin. And that is going to blow up in a lot. One of my biggest concerns about Bitcoin today is a black swan event with one of these treasury companies, or many of them failing, all trying to replicate what Mike Saylor's doing. And they're not, by the way. They're not replicating what Mike did. And most of them are not replicating what he did. He had a company that had real customers, real products, a real service, real income, and real EBITDA. These guys that are coming in right now, no product, no service, no customers, no EBITDA. So I have Bitcoin goes to hell, goes to 70,000. I still have cash flow. I still have tenants. I still have real property. I still have tax write-offs, and I still have the appreciation that comes from long periods of time. And I have an asset sitting there that I don't have to get rid of because it's still producing revenue. And I just sit and wait and basically use the cash flow from the asset to buy Bitcoin at a lower price because I'm dollar cost averaging our cash flow every month to buy more Bitcoin. So I just wait out the 2-year winter. If there's a 2-year winter of Bitcoin, if we go into 2 years of hell or winter, then I'm so what?
We just hold it. I love that. As we're coming closer to the end, I have one question. I usually ask a different one, but I'll change it for you as a starter one that doesn't fit that nicely. What would be your number one advice for so many Bitcoiners of us that are fully invested in Bitcoin? Like I myself, like almost only Bitcoin, my small company, and nothing else. Do you have any advice for like, let's call them Bitcoin maxis like me?
Yeah, I hope you're right, man. You know, I hope you're right. And let me also just say that, look, if Bitcoin goes to $1 million and let's say you have 100 pieces, now you got $100 million. At some point, you're going to have to make a decision to do something. You're going to want a yacht. You're going to want a house. You're going to want cars. You're going to buy something, bro. This is not a Bitcoin only universe. If Bitcoin goes to $1 million, you're going to see inflation that we'll see inflation of luxury items that we have never experienced before on planet Earth.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.